Disclaimer, all these thoughts and opinions are our own and our guests and do not belong to any entities we're involved in.
Also, keep in mind we are active college students, so any of this does not reflect active investment advice or counsel.
Yo, Crockett, what would you do if you had $1 billion?
I like where this is going. I don't know. Are there any caveats?
Yeah, one big one. You ended up losing 87% of it.
All right, I don't like where this is going anymore.
Well, what's your next move, you think? You had $1 billion and you lose 87% of it. What do you do next?
I got to get that money back. Probably I don't know, go into finance, boring job, investment banking,
so
something
much
like
fun.
that. I don't know. Do you have any suggestions?
Yeah, what about, selling carpets?
What?
Yeah, carpets, rugs. Every house needs a carpet, no?
I feel like this is going somewhere.
Yeah, it's going somewhere.
I feel like this could make an interesting episode.
I think so, too. All right, guys, welcome back to UNinvested. Today we're going to be talking about John Foley, who's the ex-CEO of Peloton and his new venture, which sells custom carpets. I'm Sahil Seth.
I'm Crockett Calloway.
And this is UNinvested.
Welcome back, everyone. Real quick in the beginning, thanks for the support on all the new social media channels. We've been trying to load up our Instagram, our YouTube is growing, Our TikTok's growing, actually.
Yep, follow us at un.invested on Instagram.
Yeah,
we're posting funny short clips from the videos. Got some memes up there.
Our memes are good.
All the good stuff.
Pretty good. And thank you again for the Spotify and Apple Podcast listeners for tuning in. Shout out to you guys. We never forget about you. But let's get back to this. So the idea today is John Foley, ex-CEO of Peloton, and his new venture, which includes selling carpets.
Yeah, so it's called Ernesta. It's a new venture. So for those of you who know, the ex-CEO of Peloton has gone through a pretty, they've gone through a lot of turmoil. Why don't we talk about that first? The rise and fall of Peloton, sounds similar to when we talked about Adam Newman, the rise and fall of WeWork. This is not as bad, but I will say it's pretty bad.
Yeah. I can give some background, right?
Yeah,
so
for sure.
I assume most of the people listening, you guys know what Peloton is. The at-home fitness bike and online fitness program company. During the pandemic, they were huge. Let's give some background, right?
They got treadmills. They got
treadmills too. But I feel like they're known for
the
bikes and the
everyone
shoes.
The bikes,
everyone
the
likes to flex about them when you have them.
Yeah.
It's a big part of it. I don't know. I've never been on one still. Have you been on one?
Yeah, I've been on one once, but I've never done it with where you have the giant screen, watch the videos and follow along. I just use it like a normal stationary bike.
Well, maybe it's good that we haven't used them because they're going through some stuff. I'll walk you through the background for the listeners. So,
thank you.
The year's 2012.
Yep.
5 people come together and they found Peloton. Those people include John Foley, who we're highlighting today, Hisao Kushi, Tom Cortez, I have the names up here, Graham Stanton, and Yoni Feng. That last guy, Yoni Feng, he met the rest of them because one of his roommates worked at the company where all the other founders worked. They worked at IAC, which was a software and internet services company.
Oh, so they worked in SaaS software essentially?
Yeah, basically.
Okay, cool.
And it still exists. Their stock is up as of today. So this company still exists, but they all quit IAC. 2012, they come together. They found Peloton. They in 2013 go on Kickstarter.
Yep.
And they released their first early bird bike. Their most expensive version was $1,500.
Really?
Which I think
that's cheaper than it's $2,000 now. No,
I think the cheapest version is $2,000.
Yeah, probably something crazy like that.
So right, humble beginnings. In the beginning, it said that Foley let the other guys I think there's an exact quote. The other guys took it, ran with it, and built it while I was gone. And what he was gone doing, this is Foley in this case, was fundraising. So he was leading, going out to investors. We've talked a lot on the show about there's the idea that investors have to pitch VCs just as much as VCs have to, investors have to pitch founders just as much as founders have to pitch investors. And so he was kind of the point man going out and pitching Peloton.
He was pitching, or was he getting pitched to? Was it
probably a bit of both?
Yeah, I don't think Peloton was that big, like it is now.
Especially, no, you're definitely right. At that point, it wasn't that big, but the point is, from a financing perspective, he was the guy going out, and trying to raise capital on their behalf. So they start shipping their bikes in 2014. Again, slow rise. 2018, they start to pick up a lot of momentum. Yeah. As of 2018, they'd raised more than $500 million in VC funding. So $550 million in VC funding. That put them at a valuation of $4.1 billion.
That's crazy. All that funding, even before the pandemic, everyone stuck at home and essentially forced to use, home exercise units like a Peloton.
They were already the market was already primed. They were already like there was a rising interest in at-home workouts.
So COVID was like a gift to them almost.
Oh my!
It was like the layup. It like really just fast tracked them.
Beyond a layup. So here's the thing, Sahil, and like you pointed out, it's a brilliant segue. COVID happens, right? People can't go outside.
Yeah.
I'm sure many of our listeners know this. Peloton skyrockets to a point that actually in 2019 they IPO.
Yeah.
An IPO is an initial public offering.
So it's when me and Crockett go out, we can become, owners of Peloton now.
Yes.
Buy a
So
little
now
share.
at this point you can buy a share of Peloton. It's what's known as it's now a public company. Before it was a private company.
Yep.
Because anyone can go out. They IPO at $30 a share. So that means you can buy one share of Peloton is $30. I know there are some like Schwab lets you buy half shares and like you can buy like.
Well, that's like Robinhood, right? You can buy like a fraction of a share.
Yeah, exactly. So you could go put $1 into Peloton. You wouldn't own much of it. But they started off in COVID, $30 a share. At the height of COVID, they're trading at $171 a share.
Yeah, and that's when John Foley becomes the billionaire. He gets the B.
Yes, he hits the 1B, which is where our intro came out in the beginning of this. Even before that, they had hit unicorn status, right? Unicorn status, again, is a startup valued at least $1 billion, $4.1 billion valuation. So they're doing really well, right? Since then, and by the way, and we just noted, like, COVID was a prime time for them, right? Because it's everything Peloton would want. There's online classes. You have a perfect at-home workout machine. You can brag to your friends about these awesome things you're doing at home, and suddenly they want to up their, like, in-home workout space. It's perfect.
Yeah.
And since then, how have they done, Sahil?
Yeah, I know. I think people were like, do I pay $2,000 to get a bike that doesn't move, that sits in my house when, I could go outside and run, just as good. Go on a bike outside. It's nice. And I feel like, after COVID, people are really cooped up. So it's like, I don't want to spend more time in my house than I have to. If I can go to a gym, finally, I might as well just go out and get myself a membership, which is exponentially cheaper. Maybe like $30 a month at like a lot of gyms. They can get more expensive, but nowhere touching $2,000.
So it's almost like you can tell the future, because that's exactly what happened with Peloton. Their stock ended up tanking. At one point, their stock was trading at like $6.60 a share. Mind you, like I just said, they IPO'd at $30 a share. At one point, they were at $170. So one share is $170. You're going down to $6.
Yeah.
These days, they're consistently trading below their IPO price. So they're less than $30. Just this year, companies laid off reportedly more than 5,000 employees. They lost their top 4 executives.
I mean, that's nowhere near what Meta Facebook, Meta, whatever you want to call them, just laid off. 11,000 people.
Yeah.
In just, one weekend. And then Twitter the weekend before.
Here's the thing, is like everyone's going through tough times right now, especially. Yeah. But I think when you look at Peloton, like, this is a business who made their profits off the pandemic. That, obviously COVID's still going around. There's no denying that. But the height of their success, the environment that they operated in, is gone. Meta is just like, look, crypto's here to stay. NFTs are here to stay. The metaverse is here to stay. They're just going through tough times, especially given like the recession that we're
Yeah,
through.
fair enough. Well, do you blame Foley? Like, do you think it's his fault? Or do you think it's just like, company blew up,
look,
got too big? Or I think he had a little bit of poor leadership there. I don't think he really had that, like, took full advantage of that growth and like anticipated for the downturn.
I think you're right. Like, there's room for foresight. There's room to look at his own success, be aware that the pandemic's what's contributing to it.
Yeah.
And maybe make like a strategic pivot. What is it, just for our listeners, what is a pivot in the VC and entrepreneurial space? Like, define pivot.
Well, pivot can mean so many things. It could be changing of ideas, changing the business, really just a change. We'll call it pivot a change. But specifically, Foley had a very big pivot in what he's doing with his life. We call it a life pivot.
What's that pivot, Sahil?
So now he just started this company, Ernesto.
So he quit. So he's done.
Essentially, yeah, he did quit.
Okay.
But he came under a lot of scrutiny. It wasn't like, I'm quitting on my own accord. It was like people were like, listen, like, this company is failing. We need new leadership.
So he quits.
Yeah.
And by the way, he's not quitting at like just any time. There's reports right now that like Nike, Apple, Amazon are interested in actually purchasing and buying out Peloton completely. Right. So he's feeling a lot of external pressure at this point. He's a hardened entrepreneur. He's a hardened leader. Actually, before he had left IAC to go found Peloton, he was the president of Barnes and Noble for a little bit.
Oh wow, I didn't know that.
Yeah, so he's a hardened leader. He's no newbie.
So he's like a founder and like a proven CEO essentially.
Yes.
Okay, wow.
Well, proven. I mean,
he can scale a company.
Well, I mean, what does he prove exactly?
Yeah, I mean, we could say like Adam Newman is proven they're able to scale it, but consistency wasn't there. We'll say.
So he leaves. Just like Adam Newman, had his leave, which we'll talk about in a second. He leaves and he founds Ernesta. What's the current status there?
So they just raised $25 million in a Series A. So basically, like, one of the first big funding rounds, we'll call it, by a lot of his old investors that invested in Peloton. So he kind of used his network, used his connections to get more money for his new idea.
Mm-hmm.
So this kind of brings us back to that point about Adam Newman, about these venture capital firms really having faith in these, founders, knowing the team itself, not just the idea. It's not, you can have a great idea, but these firms also have to have a lot of faith in the people backing the idea.
And that's also the role of like an active investor, right? It's like you back the person,
Exactly.
You back who they are, you back the concept that this person's going to go on to do bigger and better things.
Yeah,
and they're going to keep being successful and entrepreneurial, and you stick with them, which is what,
Yeah.
for example, like True Ventures is doing. Right?
Exactly. True Ventures, in addition, both the people that led those companies were early in on Peloton. Their Series B and C rounds. So they're very accustomed to Jack Foley. They have a lot of faith in him. They think he can scale this business, but it's kind of hard to imagine that this custom rug idea in like this recessionary environment got $25 million.
There's got to be something more to it. There's got to be something special.
Like, are people for to give more context what the company does? Essentially, instead of going to like Home Depot, Lowe's, buying like these generic carpets they sell in bulk, it's like going to Pottery Barn getting like a specialty rug for your house instead.
And the idea is that they're all like custom cut, right?
Yeah. So they like.
Whatever that means.
Yeah, I don't know. They buy like big, like lots of carpets, I guess, and cut them and do everything themselves. But I don't know. It makes me think like, is that the number one people are like worrying about now? Like gas prices are really high. I think you're gonna save to buy gas for your car rather than buy a new rug, especially like for first-time homeowners.
Well, what I'm curious about too is we keep questioning like whether or not this is a good idea. How can you justify pivoting from like a massive something in the fitness industry, which is like a booming industry,
tech industry,
right, /tech.
I feel like there's got to be another angle on this, like carpet. Like, what is their like next product? Like, are they trying to sell something else? This is just like the beachhead product. For those of you that don't know, like the beachhead is like kind of like how you enter the market, how you like grip your customers before selling them something else, selling them more products, and really like hooking them in.
Because what I have a hard time forgetting about right now is, look, he was the president of Barnes & Noble. Barnes & Noble is a B2C business. B2C means business to consumer. And so you're a business, you're selling things to consumers. Other types of businesses are like B2B. You're a business who sells a product to another business, like a software or something like that. So he was B2C, business to consumer at Barnes & Noble. Then he goes to Peloton. That's a B2C business as well. He knows the space really well.
Yeah, direct to consumer. He's selling just to consumers, not to other businesses.
Direct to consumer. So he obviously knows like the times when B2C businesses work, when they succeed, the team you need. So he's clearly seeing something. And so Ernesta, this rug business, the carpet business, it's a B2C business as well. So he's clearly seeing.
So he knows the space. He knows people. He knows how to sell retail. It's a very different product, you might say, but same industry, we'll call it.
It's also like an at-home industry too, right?
Yeah, exactly.
Just like Peloton.
It's like big assets, expensive assets. Rugs aren't cheap. When I first renting this place, I had no idea how expensive rugs were. Much more expensive than I initially thought.
So it makes me think: is his goal to undercut the rug market and sell like mass amounts at cheap prices?
I guess, but still, like, it's not like his claim, his like pitches is like people are going to protect the hardwood floors on their number one assets. Number one assets being their homes. But I don't know, in the future, I see people buying homes less and less. Interest rates touching right around 7%. Only going to climb. The Fed, the people that control the interest rates, are just saying they're not slowing down at all. They want to slow down spending, and they're going to keep raising the interest rates, and that means buying a home ultimately is more expensive. They call it like for every dollar you put on your home, it's more than just that dollar. You have to pay that interest rate on it.
So then, okay, so my question to you is, and this is just speculation, is so in a time when people are concerned about their home value, they have less purchasing power as well.
Yeah.
Like, do you want to be upping the value of your home by purchasing a rug because now you're making the space nicer? Like, if you're buying a place, whether or not you're buying a place with or without furniture, if you're showing a house and there's a nice rug in the house, home value goes up. Or is it that like maybe this is dangerous because you're already worried about the amount of money you have, you're worried about your home value. Yeah. Why are you going to go spend money accessorizing your house?
Exactly. That's like my thoughts. That's exactly my thoughts. Why would I go buy? It just seems extra. There seems to be like no demand there for carpets. Like, as people have less demand for spending, carpet's going to go right down with it. It's not like carpets have this steady, inelastic demand that's going to be persistent over time. I feel like one of the first things to go in this room is going to be the carpet. It's not going to be the couch. It's not going to be the furniture. It's going to be the carpet.
First thing we're selling when our house goes under is we're selling our carpets.
Yeah, like none of you can see the carpets, but you can all see the couch if you're watching, of course.
But I mean, this makes me think too, right? Is like we keep going. We have so many questions for him. At the end of the day, there are VC firms that just raised $25 million for him. So he must have pitched something special to someone, right? Because you can be an active investor, but at the end of the day, you're gonna question things. You're gonna do your due diligence. You're not just gonna accept his idea for a just like a completely obscure custom rug business, right? The other thing I keep thinking about is he had a little bit of foresight when he was doing Peloton, right? Like he must have explored this market of people increasingly doing at-home workouts.
Like fitness industry itself.
He knew he had ideas that people didn't have, right? About like where a space was going.
Yeah.
Is there a certain direction that like the rug market is going? Like
I don't know. Like I wonder what like the average lifespan of a person buying a rug is. Like, do you buy a rug and keep that for the rest of your life, or like a custom rug? Like, how long do you keep like
a custom rug? I would imagine you keep forever, right? That's like you're customized. You're putting value into it, like.
But then you don't have a lot of repeat customers. I mean, I guess if you buy a rug for like every room in your house, but that customer's not coming back. You don't really have to like sell something. Like we're like Peloton, you had $2,000.
You have super high churn,
right? Yeah, exactly.
And let me
go for churn.
So churn, by the way, in entrepreneurship and VC is. So there's retention and churn. Retention is the people that stick with your business and keep doing it. Churn is the people that churn out of your business. And they're no longer customers to your business. And so when we say that they have intense churn here, it's like you're buying a rug once,
and then you'll never buy from them again. You're never using this business again.
Unless it's like a subscription, like you pay $30 a month to keep your rug, and then as soon as you don't pay the $30, someone knocks at your door and pulls the rug out of your house.
Yeah, I mean, what's crazy to me is they don't even have like a product. They haven't even established like maybe they've gotten like deals and contracts that they can make cheaper rugs, but it's not like they've listed a rug, shown a physical product, having a custom rug that is cheaper. Like, they're not even launching.
What happens when you go on the website right now? Like, what's their website?
Yeah, the website doesn't have like any information. Just like, join our newsletter. Sign up. Hear information. News. We'll launch like in the spring or something, right?
I mean, there's pretty much nothing on it. Yeah. Which I mean, you know what this exactly reminds me of? Speaking of nothing on it, which we have talked about in a previous episode, is Adam Newman.
Yeah.
Right. Like Adam Newman, founder of WeWork. Like we talked about in a previous episode. We can roll the clip for everyone listening. Adam Newman, famed and some would say failed CEO, has just had a massive recent $350 million investment backed by his same former lead investor, Andreessen Horowitz, for his new company, which people are widely speculating about. Yeah. So there you heard it. Adam Newman, extreme parallels here, right? He goes on to found his next real estate venture. Yeah. And there's no information on it. And there's very little information about Ernesta here too.
Exactly. Like, are they operating in stealth, or like are they just still too early for any product to be out there?
I don't know, because at the end of the day, right? Like you're a new founder, you want a certain degree of stealth, especially when you have so many eyeballs on you. Yeah. Like John Foley does here, right? Like people know he has good ideas. He's clearly afraid that like as soon as he releases any information, it's going to get copied, which happens with every single business out there.
Exactly.
What do you see as like the differences between what he's doing versus what Adam Newman has also done?
I don't know. I mean, there wasn't really that much like press on. If you're not really following like VC news, like you would have had no idea that the XCO Peloton is starting a startup. Mm-hmm. But I guess like that's twofold, just because the amount of money he raised wasn't $300 million, and Peloton, unlike WeWork, didn't like lose people billions on top of billions. People lost a lot of money, but it wasn't like a complete failure like WeWork is today. Mm-hmm. But I guess the parallels would be like between the two people themselves, just like using their like charisma to go out and give themselves a second chance. Mm-hmm. But I don't know, are they owed that? Like, do they have the ability? Like, should they get this chance?
Look, okay. In my opinion, I think this is really different than WeWork. I think that John Foley is owed this experience. He can continue on. And like found a new venture. It's very different than Adam Newman. Like Adam Newman made a lot of poor leadership decisions. Yeah. In WeWork, of course. Then like even if it was heavily like dramatized and there was We Crash, like even if that stuff wasn't completely true, that's how people see him now, right? Yeah. And you can't help but like changing people's minds. John Foley didn't make any like direct, like maybe he didn't have the foresight to anticipate that the end of the pandemic would also lead to kind of a decline in Peloton. Yeah. But like that's something a lot of people could have made a decision like to do the exact same thing. Yeah, he's just doing the best he can.
Differently. I don't know. It's like not so. He didn't do like promise anything like fake dreams.
I think at the end of the day, this is a lot just more interesting to me than it is like scary. Like the Adam Newman stuff scares me.
Scary. Like giving him $300 million. Scary.
Yeah, terrifying. this is just you're having nice active investors stick with you, giving you another $25 million. He made a safe exit from the company. It wasn't a contested exit from the company. Maybe the status he left Peloton was contested, but
yeah,
it feels forgivable.
I mean, 25 million, like, to us, that's like a lot. That's a lot of money. But like to these firms, you have to think about it. They have to spend all the money in their funds. They have to like deploy that capital, we'll say, and give it to entrepreneurs. You know, they have billions of dollars to give. 25 billion, like, is a big check size, I'll say. But you know, in the grand scheme of things, they're allowed to, like, they have the ability to take that bet.
Right. It's also like it's a big check size. We don't know what kind of valuation they have yet, too. So it could, I don't know, it could really be anything at this point. But what we'll do is like, look, we'll probably continue to post updates about this on our Instagram and all of our socials.
Yeah.
They're expected to launch Ernesta officially in the spring. So
yeah, we'll keep updating. Maybe we'll do an update episode on how Ernesta's doing. Maybe if people buy our custom rug, who knows?
Oh, maybe we should do an Ernesta review.
Oh, That'd be fun. We'll get like a little uninvested rug or something.
Let us know. Give us a comment in the YouTube or on the Instagram or any of our platforms, and we'll do a little bit of review on it.
Yeah.
Good stuff.
For sure.
Well, hope you guys enjoyed the episode. Sorry to John Foley for getting the rug pulled out under him. No pun intended from Peloton. But as always,
I'm Sahil Seth.
I'm Crockett Calloway.
And this is Uninvested.
Thank you.